Hi, Ross McInnes from Australian Investment Research Services. Thanks for joining us. A very eventful night overnight with the US stock market down around 3.5%. The S&P 500 closing below 1,080, which was a reasonably key level, down at 1071. This was driven in part by the market's negative response once again to the prospect of new US banking regulations. They went through Senate, potentially going to vote over the next 24 hours to put these through. They involve too big to fail, new consumer protection, and also capital requirements for the banks. So the banking index was down 4.5% and continues the pressure that we've seen globally on the banks. There was also the ongoing uncertainty in relation to Europe. Still, investors in the markets are not convinced that they have a solution for the Greek debt and the potential for contagion through the Eurozone, with their markets down another 3% as well. And it's driving the potential for an emergency meeting across the G20, as we saw last year in April and May, when there needed to be a major response to the markets. So we'll be looking for that as well, announcements over the next 24 hours. For the Australian markets, it looks like there's continued bad news. The SPY's got the market down, got the ASX 200 opening around 4,200. It was at 4,400 yesterday, and would represent the market now being 14% off its highs, off the April 5,000 level. So we've got a period where we've still got this period of uncertainty, and although they look like good value, starting to become good value, the market at these levels, short term we've still got this volatility and negativism in the market. Also, the Australian dollar reflecting this change in the world outlook that we've seen, rapid change in the world outlook in the last 10 days, noting that the Aussie was 90 cents this time last week. It's opening this morning in Asia around 81.30, and it also is down at 9-month lows. So if we look at it in big picture, the markets in April, early April, mid-April, got back to the pre-Lehman levels. Volatility was down in terms of equity indexes, down to about 15%, so it's back to normal levels, but there was still the underlying structural problems that we've been talking about now for the last 5 or 6 months, and this has come home into the market now, and we still, as I've said, still need to see a much more coherent response by the major countries to how they're going to resolve the sovereign debt issues now, moving away from the banking debt issues. So on the day, 41.50 on S&P 200, the ASX S&P 200, and probably 80 cents on the Australian dollar. So at this point, we're just going to continue to get some more volatility until we see some sort of integrated response. So thanks a lot, and we'll update this afternoon. See you later. Bye-bye.